Hey, good morning, everybody. Welcome to Wednesday live webinars. And good to have you today. We're going to continue a financial literacy conversation. Specifically, we're going to continue the basics of profit and loss statements. We're going to read these profit and loss statements to make sure that you, as a small business owner, this is geared toward you, the small business owner, who really doesn't have confidence in looking at financial statements, the profit and loss statement, you're going to be able to read this thing. Okay. So let's get into it. You know how we do. All right. So this is me, Chaston Bulgin with By the Books Consulting. You reach us at 888-4BTB now. You can also reach us online at bythebooksconsultants.com, and that's my email address, Cheston at bythebooksconsultants.com. Of course, we do accounting, QuickBooks, advisory, the bookkeeping, and we do tax strategy, tax filing, and operations consulting for your business. Quick disclaimer before we get started. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and/or legal professional for specific advice. And of course, if you want to forward our conversation here, you can do so by communicating. You can reach out to me via email. You can reach out to me on IG, or you can reach out to me on LinkedIn at Your Accounting Superhero. This is 10-Figure Business Mastery. So basically, this is the group that you want to be in if you're looking to take your business step by step to whatever levels you want to take it to, whether you're just getting started or if you've been in business for a while. There's always a new level. There's levels to this thing, man. There's levels to this game. And it doesn't matter where you are. It's okay where you are. The idea is that if you're somebody like me who actually wants to see improvements in their life, they want to see their life moving forward and progressing in all these aspects, then you're in the right place. You want to be here in this conversation because we're going to get you there just by being in this mastermind group in this weekly live video. So these are the tenets that we stand on. Number one is intentionality, which is mindset mastery. Number two is financial mastery, which is also financial literacy. 3 is structures, which is also known as system mastery. And last but not least is actions or execution mastery. Now, we need all these things. We need all 4 of these things to be really successful in what we do in order to make sure that we're never stopped in business. So if you're stopped where you are, if you ever feel as though you're stuck, most likely it's in one of these areas or multiple of these areas. Now, what is intentionality or mindset mastery? This is what we call an absolute focus on what it is that we're up to inside of our businesses and inside of our lives. So there are a lot of things that go on the outside. There are a lot of things that go on the inside that distract us from staying true to the task, true to the purpose. What am I here for? These can be simple as social media. Everything out here on social media that we can pay attention to, that we get distracted by. Man, I was on Facebook the other day, and I don't ever hardly ever get on Facebook to just do social media. I don't hardly get on any social media just to be on there. But when I do, here's the thing that happens. All of a sudden, my time gets sucked up for like 20 minutes, 25 minutes. I went on there for one thing, and then all of a sudden, I'm in there for 25 minutes without me even knowing it. That is a complete distraction. And I know that some of us can relate to that. Some of us spend all day TikToking, Instagramming. You know that's you. All right. Now, that's not absolute focus. That's not intentionality. Intentionality means that I'm not distracted by these things. I actually have mastery over my time. I have mastery over my thoughts, which is another thing. So many things on the inside, like the fears, the doubts, the worries, the concerns, the uncertainty. Those things can really detract from our focus so that we're not here to actually do what we say we want to do in life. All right. So this is mindset mastery. Make sure we're here to focus on what we're supposed to focus on, or what the intention is, rather. Okay. Financial mastery. We've been in this conversation. A lot of people have what we would call some skewed understandings of financial mastery. Doesn't mean you have to be a millionaire, billionaire. it really does mean that you have to be intentional about finances, and you have to have some idea of financial literacy. At least if we have that, we can start to begin the mastery process, because when we start practicing these things, then the mastery is available. Some of you listening in may be frustrated. You may feel as though you can't catch a break. And especially inside of the finances and business, some people I talk with, they say, man, I can never seem to just get ahead, man. It's like always something always happens. I start moving 2 steps forward and I get taken back a step. And really, inside of financial mastery, it comes back into understanding the basics. Basics like, well, how to read a financial statement. The basics like, well, what did I say I would do in terms of a budget? What did I say I would spend? The basics in saying, well, what is it that I'm actually moving toward in terms of revenue goals? And what are the actions I'm taking to accomplish that and achieve that? It really can be as simple and as basic as that. And it can be so powerful at the same time. Financial mastery. That's the game that we play over here with By the Books Consulting. We specifically focus on this area because there's magic when we actually understand the simplicity of it all. If we can just leverage it and give it the attention it deserves, your life will work in this area where it has not ever worked before. Okay, that's financial mastery. Now, structures basically means that when I do something, I want to make sure it counts. How many of us feel as though that when we do something, we have to keep repeating and doing things over and over again? There's a cycle, right? It's like I can't really master my time. I can't really master making sure that all these things are taken care of, and it occurs like overwhelm. Like you're not able to keep up. You're not able to do. It's like some people seem as though they're able to do so much more than you are inside of your business, inside of your life. Well, it's only because this area has not been given the attention it deserves. We want to have structures in our business so that we're not killing ourselves, number one, like with overwhelm and doing things repeatedly over and over again. Starting, it's kind of like those old school wells where you go down to the well and you prime the pump and you start pumping that pump, and then you give up on it and all the water goes down and you got to start from scratch. It sucks, right? So most likely you're experiencing that type of experience because you don't have the proper structures or systems being built out as you're doing things. This is I won't even say hyper, it is just critical that we do this. Okay? Create the structures around us that help us do more with less. And then, of course, the last thing is actions. Actions really mean that I'm going out here and executing every single day on what I said I would do. Okay, what was the game plan? We said we would do this, so let's go out here and do it. And then come back, reflect on what the results were, what the impact was of us actually doing what we said, make the adjustments, go out there and execute again, consistently and reliably. You put all these things together inside of your business, it's inevitable. You will take it to whatever levels you want to take it to. Just keep at it. All right, so we're in a financial literacy conversation. We're inside of that tenet there, the financial mastery. And, we did talk about income statements and break-even points last time. Now we're going to really just get into an income statement line by line. I want to just go over line by line how this thing pans out and how we should read these things in order to get some insight and understanding as to what is impacting the business. And then where you can actually see you can go to work based on reading a financial statement. All right, so let's actually get into that. Okay, I'm not going to get into any more slides. I'm going to share my screen real quick. All right, awesome. I'm just going to get rid of this. Okay. This is basically a sample financial statement. And we're looking at top to bottom. of a financial statement. All right. Not enough of us spend time here inside a business on a regular basis going over the performance that's given to us inside of a financial statement. Like financial statements really give us performance. Now, if we look here, this top to bottom, we have income, then we have our cost of goods sold, which is really direct costs. Then we have the gross profit, the money that's left over after we take into account the direct costs. Then we have our expenses, and at the bottom of that, after we have our expenses, we're going to have our bottom line, which is our net income. Okay, so that's a financial statement. That's a profit and loss statement. Sorry, yeah, income statement, profit and loss statement in a nutshell. Okay. Now, how do you use this thing? Like some of us really do understand what this is, and then a lot of times we'll look at it and say, "I think that's good," or "I think that's not so good." But how do we know? Okay, what is it really used for? I like to use these to do what we just said, know whether or not we're actually performing according to what industry standards are. All right, am I doing well in comparison to what the industry says? All right, but also the main thing is just looking at what is impacting this financial statement the most. Is it lack of revenue? Is it going to be too much inside of my direct costs? It costs me too much to produce the revenue, like it costs me too much to produce the product. Some people I've seen, they'll go out and they'll sell things, and then their direct costs are more so than what they're selling the thing for, but they never even knew. How about that? That's not necessarily good business, right? So we want to understand impacts. What should I be charging for my services or products, whatever it is? Really, the choice is yours. Somebody asked me, what's realistic inside of a business? What should I expect? What is realistic for me to set a goal for? What should I expect? Well, whatever you say is realistic. And, I want to pull that in and rein that in so that it makes sense and it lands for you. Really, you want to set your aim high in life. Set the most astronomical goal that you feel you can set, and then go to work. All right. That is reality for you. If we start looking at reality in terms of what everybody else says we should have, then your life is going to be lackluster. It does not mean that there are some things out here that we need to deal with in terms of the economic ebbs and flows, the market impacts. Those things are out here. We deal with those things. Those are also real. At the same time, the stretching of yourself to determine what it is that you say you want to get and achieve in life is you, and that is your reality. It's up to you and I to persist into that reality is out here in tangible form. Okay, so when we're talking about setting a realistic goal, aim for the stars. Okay, and then figure out how to get there. Bridge that gap. Basically, this all helps us do this, guys. This all helps us do just that. When we set the goal, let's say I want to generate, maybe $4 or $5 million every single month. Well, what is it going to take for me to do that? Well, I may only be generating 100,000 a month at this moment. And then I say, look, I want to take it to, 4.5 million every single month. Well, now it's like, wow, what does that look like? What would I need to do? Who would I need to be? And then we start walking it forward from there. We can set our targets. We can set our milestones and objectives from there. Okay. Now, with that being said, we're going to bring it back to this conversation. Well, how to read it, how to know how we're performing. What is it that we look at here? Of course, this is broken up. What we're seeing here is broken up into quarters. All right, this is quarterly performance that we're looking at for 2023. And if I were to read this, I would say, okay, well, there's if I'm looking at the revenue top line here, I'm saying there actually is some consistency. All right, there's consistency, small variance inside of performance. The consistency looks like somewhere between 20 and 23,000 a month in revenue. If we're looking at each quarter, we're looking at the numbers of performance that have been done here. We're looking at a pattern of somewhere between $20,000 and $23,000 per month in revenue. Now, knowing that in the top line, there are all sorts of questions that we can ask ourselves. Well, man, I wasn't even thinking about it. Maybe this is you. You weren't even thinking about it. You were just going out and doing your thing. You didn't really have this target in mind to do 20,000 or between 20 and 23,000. It just so happened that this was the case for you. Unintentionally, this is what happened. Now the question begins to circulate inside of our mind as, well, what if I actually focused on producing a larger result, producing more inside of this? What would that look like? It would be the questions I would start to ask while looking at this financial statement. So if I know that, at least I'm doing 20, at most I'm doing 23, well, how can I maintain the threshold at the top and then break beyond the top threshold to get to something new? What things would I do to do that? All right, you start asking yourselves those questions, and then you start finding solutions in order to move that beyond where it is. You already know that, man, this is predictable. I'm going to break this pattern to the upside to get a new predictable pattern. That would be the next thing to look at. Well, how would I be able to do more? Now, the other thing is, after we look at that, we're going to start looking at what's impacting, what's taking away from that top line number. The first thing that takes away from that top line number are the direct costs. We call that cost of goods sold. Now, if you have a product, the cost of goods sold is basically something that will, which is the cost of you producing that product to sell. For example, if you have widgets and the widgets cost you $10 to make, that will be your cost of goods sold, like $10 being like the materials and the direct and labor costs, etc. Direct overhead, and that's inside of that too. So those are your direct costs associated with producing that product. Right? You wouldn't have to have that cost if you did not have the product. If you did not sell the product, you would not need to create the product. So that's going to be what we call a variable cost. The more that I sell, the more it costs relatively. Now, what if you don't have a product? What if you have a service? Well, if you got to look at the things that if you did not produce that service, well, you would not have that cost. For example, we do a lot of service work here, like for accounting and everything. We do bookkeeping, we do taxes, and all of that. Now, I do have direct costs associated with that. Like the labor costs is really the direct costs that we have, direct labor costs. We also have licensings and everything that we would not pay if we did not produce certain things. So they're direct licensing costs for us to produce that. That would go here inside of the cost of goods sold. Okay. Now, this particular example here is a trucking company. They do some revenue, so they have fuel expenses, right? And this is like the equipment rental. They would not need the equipment here if they did not produce the load. They would not need to do that. They would not need to rent the equipment. Now, this is something also, I'm gonna be here with this. This could actually be a fixed cost, like something that's going to be there no matter what, depending on the relation, the engagement. And a lot of companies inside the trucking industry would have this as we call just a regular fixed cost, and it would not come here. The fixed costs are different because these are costs that you would have regardless of whether or not you delivered a service or provided a service or provided a product. That's what a fixed cost would be. So in actuality, this equipment rental could be moved down into the other section if this were something that this business would pay regardless of producing the load. Some companies if they go out there and do as needed rental for freight and delivery. If they're not going to do anything, they're not going to have that cost. They'll go out there and rent something to provide transportation services. And hopefully that makes sense. All right, so direct costs. The other thing that would be direct costs here that's not showing up would be a driver cost for a trucking company. That would be something that would be here inside of a cost of goods sold or direct cost. Okay. Now, once we take into consideration rather the direct cost, there's something that we call a gross profit and a gross profit margin. We want this number to be as high as possible inside of our business. Okay. Let's cycle back a little bit. Let's talk about direct costs a little bit more as we're talking about gross profit margin. So gross profit margin means that I can keep either more of the revenue that I bring in or I keep less of it. Now, what would it be like if I were able to keep 60% of my revenue that I generate gross profit wise? That leaves me 60% left over for operating costs and profitability, right? So if you're looking at your profit and loss statement, you're also looking at how can I manage these direct costs in a way where I can keep more of the money? What kind of actions can I take? What can I do to make sure that those direct costs are efficient, which means that I'm not wasting any money on my direct costs. I'm actually spending optimally just as much as what's wanted and needed to deliver the service and no more. This opens up a whole new avenue for you if you're actually looking at things like this, because it gives you the actions necessary to go to work. Okay, for example, this is a trucking company, fuel expenses. Okay, it's 41% on fuel. What is that like across the industry? We look into it and see, well, what is it that breeds? What's the actual industry standard for the fuel costs in relation to how much revenue is brought in? Do the research, see where you are. It's like, okay, I know that I'm placed here. I'm doing a little bit better, but how can I do even better than what I'm doing now? And you can realize that maybe there was no focus here before where you can actually focus and say, well, I'm going to go ahead and look for other vendors. I'm looking for fuel cards that give tremendous discounts. I'm going to look to make sure that when we're out here doing our loads, we're running our service, that we're planning the routes and such that we only go to specific places to fuel up, because that makes more sense for us to optimize the direct fuel costs. Right now, see, if I was not looking at this, then I would not even be thinking this way. This is what you want to get out of reading the profit and loss statement. Right? This is what it makes available to you when you're reviewing your financial statements. Now you can look at how to keep more of your money by just taking new actions. Being more efficient, really. Same thing with equipment. Like if you're doing a process where you're actually renting equipment like as needed, like in this scenario, then you look to negotiate your contracts maybe. You look to find a new vendor maybe. Whatever that looks like for you. So we would go down the line, actually, not just here, like as we go down and we look at all of the things that are impacting your ability to keep more of your money, you would go down the line and you would actually analyze all of these things and see, well, is there something I can do? More so, not even is there something I can do, what is it that I can do here? All right, and is this going to be something that I'm going to focus on now? Or what makes sense for me to focus on as a priority to shift things in my business? Those are the things you want to start asking yourselves as you go line by line here. Of course, you have your gross profit afterward. And then all these other things that would normally impact your financial statement would come into the expense columns or the expense section here. And we would go line by line looking at each one of these items, see, okay, what's really impacting my business? We can see here, this is a major factor, is 10.26% overall. We start to go there. Maybe we do the same thing with vendors here that we were looking at before with the fuel. And then we look at some of these marginal costs. These things are not really impacting my bottom line so much, not so much here. Tolls, like, man, that seems to be a little bit extra for tolls. almost 3%. Then what can we do here? Maybe we want to do different lanes. Travel expenses are, pretty typical. That's not something I'm looking to focus on because it's not really material to look at right now. I would go at the things that would make the most significant difference. If I can reduce my fuel by 10%, that would make a significant difference on average. There's room there to reduce it that much. There's room to reduce maintenance costs, maybe about 3 to 5%. Maybe you can reduce maintenance costs somehow. There's no reason for you to have any bank charges and fees, and he's actually doing pretty well here. It's really 0.4%, which is hardly anything. And still, there's room, right? But then you would look at like how it's been doing overall, performance-wise, profitability-wise. We're doing okay. And the idea is, how do we improve this? And then, based on the performance here, what is it going to take to scale it so that we can do this over and over again inside of our business? All right. Now, hopefully, this little exercise was helpful with profit and loss statements. The next time we get together, guys, we're going to move on. We're going to talk about balance sheets and what that means, right? Because really, these financial statements, profit and loss, balance sheet, cash flow, these main three, they tie together in a way where we can utilize them to plan out our business and really understand the performance of our business in a way that will give us the results that we want. Okay. Hey guys, it's been great being with you. I'm going to call it wraps today. It's always a pleasure. Talk to you soon. Take care.